Welcome to the Daily Rates Live show with the mortgage calculator. Today we're going to look at some live mortgage rates and then we are going to do a deep dive into 0% down loans. So we'll get started here in just a moment. Just give us a second to go live on all the different platforms because we do stream this live on Facebook and YouTube and Instagram and LinkedIn and all the other platforms here. We put the chat up on the screen there. So as you tune in, feel free to drop a comment there in the chat. I see some comments already coming in nice and early. We appreciate you tuning in nice and early. And we'll get started here in just a moment. Great topic here for today. Who doesn't want to do a 0% down loan, right? So we'll be talking about some different ways to approach that here shortly. All right, I see comments coming in. We appreciate it. And it looks like we're live on all the different platforms, so we can go ahead and get started. What we'll do is we'll take the chat off the screen, but please keep dropping comments there in the chat as we go, and you can drop any questions you have there as well when we do our deep dive here. All right, so welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, and what we do every morning on the show is go through the live mortgage rates for some different programs, and then we do a deep dive into a different topic. Today's deep dive is going to be 0% down loans. So our sales manager, Jose, with 28 years of experience, is going to talk about and give a couple examples of different ways to approach some 0% down loans. But before we do that, we'll do what we do every morning, which is see what the pricing is. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the interest rates are looking like this morning.
All right. Let me switch my screen. Oh, I'm getting a little frozen there. And we will check it out. Give me 1 second. All right. So this is our pricing tool for our team here of mortgage professionals. This will show us the general rates and the APR for today. It is January 9th, 2024, just after 11 a.m. Eastern. So all of our standard programs here are live. So we'll set up a basic scenario to compare across the programs. If you'd like a full breakdown of all the fees that go into the APR, a full loan estimate, please get with our team members. We have over 300 loan officers in 23 states. So for the demo here, we'll set up a basic scenario, 400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We'll ask the computer to find the best rates that we can offer for conforming conventional. And then we'll check out FHA, which is usually the second option we approach for most customers. And then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional options. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. USDA is only for eligible properties. If you do happen to be looking in those rural areas, just let us know. So we'll start today with conforming conventional, purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos here, we'll use an estimated credit score of 760 and an estimated debt to income ratio here of 40%. So with these settings, let's check out the conventional rates this morning. All right. Looks like the best option here at the top, 6.125 rate for 2.125 discount points and costs. Puts the final APR at 6.379. So it's about the same as it was last week. Not much change there. Definitely good action for the last couple months as we have come down from much higher rates. So awesome options here for our customers that qualify conventional. If for any reason our customers don't qualify conventional, usually the next option we want to look at is an FHA option. So we'll set up the same exact scenario. And this time we'll select FHA, which allows more leniency on credit issues as well as a higher debt to income ratio. However, for the demo, we'll keep all the settings exactly the same so we can compare apples to apples here. So let's check out the FHA options. All right, FHA changed a little bit from last show here, 5.375 rate 2.5 discount points in cost, puts the final APR at 6.311, which is just a touch under conventional today, which is typical. FHA usually comes a touch under. So for our customers that qualify for both, definitely check out FHA. The recent changes to the upfront and yearly mortgage insurance are included here in the APR, so definitely a good option for our customers that qualify for both. And our customers that must use FHA, definitely some cool options. Now, where we love to specialize is if our customer unfortunately doesn't qualify for FHA or conventional. Many other banks or lenders will have to deny that customer. But that's where we love to present our 5,000 additional options here under expanded guidelines, also known as non-QM. So we'll keep everything else exactly the same. However, we have a new option pop up here now for income verification. So full doc is what we use for conventional, and FHA, that's 2 years of tax returns, what most people are used to. So if our customers don't qualify with 2 years of tax returns, we'll typically use one of these alternatives. We have asset-related programs, we have business bank statement programs. The investor programs are just for investment properties. We'll show those in a minute. Personal bank statement 12-month is what we use for the demo. That's the most popular. And we have RSU, stated income, VOE, 1099, P&L, and no income CDFI options. Most popular here is the personal bank statement 12-month, and that's for our self-employed borrowers. Many times our self-employed borrowers may have various write-offs on their tax returns and may not qualify at all, or just may need a little bit of extra income. Either way, we'll solve that problem. No tax returns at all, just 12 bank statements here to determine a debt-to-income ratio of 40% in our example, using just the cash in the bank statements. So let's check out the bank statement options this morning. All right, best option here at the top, 7.25 rate for 2.125 discount points and costs. Puts the final APR at 7.638. So just about a point higher there than conventional and FHA options to use alternative income, the bank statement. So amazing options here. And there are hundreds of variations. If we scroll down, all kinds of different program options and variations. Some of these may allow bankruptcies, foreclosures, other credit issues that would otherwise cause our customers to not qualify. And some may use different ways to calculate the income. So please get with our team. There's hundreds of variations here. And before we go into Jose's example, we always run some live pricing for investment properties. So final 2 demos here, we'll do investment properties. We'll keep the $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. And this time we'll ask the computer to find the lowest rates we can offer for conforming conventional. And then we'll go into our expanded guidelines, also known as non-QM. Government programs, FHA, VA, USDA do not work for investments, so we'll stick with just these top 2. First one will be conforming conventional. Everything will stay the same as all our other demos. We've only changed the occupancy here. So let's check out the conventional investment options this morning. All right, best option here at the top, 6.99 rate for 3.25 discount points and costs, puts the final APR at 7.382. So good option for our customers that qualify for conventional with tax returns. And definitely recommend that our customers check out the non-QM options though, which will be our next demo. Before actually non-QM was beating conventional for a bit, but this is a more standard market where this will probably be the best price by just a touch. I still recommend all of our customers and MLOs check out our final example here, which will be the same exact scenario using a non-QM program for investment property. So the first thing we need to select is our income type. The most popular income type for investments and the most popular loan we do is the DSCR option. That's because it doesn't require any income or employment or documentation on that from our borrower. Simply use the estimated rental income from the appraisal to determine a DSCR ratio. It stands for debt service coverage ratio. The estimated rents can cover the expenses of the mortgage, aka the property cash flows. That's a ratio of 1 or higher. If the property does not quite cash flow as a ratio under 1, we still have options. For the demo, we always use 1.5 so that the computer can show us all the programs. And finally, a prepayment penalty is standard on a DSCR or any non-QM investment. 3 years is what we use for the demo. That's standard. We can select 0. That will limit what shows up and cost more money. We can also select 5 years, which will again limit what shows up, but does save our customers some money. 3 years is standard, so we can see most of the options show up here. So let's check out the DSCR this morning. Still smoking here. 7% rate, 3.25 discount points at cost. Final APR 7.499. So almost identical to conventional there, just a touch higher. Definitely recommend all our customers that qualify for conventional still don't overlook these DSCR options. Very streamlined, no income or employment documentation. You can do 1, 2, 5, 10 loans at a time. Definitely a lot more flexible for our investors. And there's hundreds of variations. Some of these at higher rates and costs down here. Lower on the list may allow bankruptcies, foreclosures, other issues. Some of these may allow different ways to calculate the income, such as using short-term rental income, very popular request. So please get with our team to find the best ones. And now let me switch my screen and pass it over to Jose for our deep dive topic today. So we love working with investors, but obviously this 0% down, we're going to be talking about primary homes. There are no 0% down options for investors, unfortunately. So these will be some primary home examples using some of the specialty programs. So Jose will probably have a few different examples. We like to use the national examples, right, that work in every state since we are a national company. So these will be more general options here. So Jose, if you're ready, let's go ahead and check out some 0% down options.
How you guys doing this morning? Thank you for joining us. Daily Rates Live with the Mortgage Calculator. So 100% LTV financing are our options for today. Couple different ways to reach that objective beyond the obvious examples here. So let me jump right into it. All right, so our first example here, what we have is some purchase examples for you today. So our first example here is a VA loan. As everybody knows, VA loans are 100% LTV. No mortgage insurance is ever applicable on a VA loan. There is a funding fee unless your veteran is exempt from the funding fee because they have at least a 10% service-related disability, in which case the funding fee is waived. So in our examples right here, we're looking at 7% as our lowest cost option, actually having a little bit of a lender credit, and we can buy that down all the way to 5.625%. And we do have lower rate options than that. That would be under a scenario where you're not getting any bona fide discount points, and that would probably be the maximum that you could pay in points for this loan amount and still be in compliance, unless the seller is paying seller credit towards the buyer's closing costs, in which case any seller paid points are not counted in the compliance test. So you could certainly get a rate much lower than that if you have seller paid points. Our next example is, again, VA financing, but this one is for our house hackers out there that we love. This is for a 2 to 4 unit property, so it is same rate, 2 to 4 units, no differentiation. And again, as you can see, no loan level price adjustment either when going 2 to 4 units over a 1 unit property. So we have 7%, again, lowest cost option, and 5.625 lowest rate option for a 2 to 4 unit VA purchase. Now, USDA is our other true 100% LTV financing option. I will note that USDA is for 1 unit properties only. You cannot get a 2 to 4 unit property, or so in other words, can't get a duplex, triplex, or a fourplex with a USDA loan. As you all know, the main benefit for USDA loans is not really the 100% LTV. That's the icing on the cake. The real benefit to the USDA loans is that they are geared towards rural property purchases. So where most loans would hit a hard stop because of the rural nature of the property, of the comparables being too far away, and the different things that being a rural property would face, USDA will accept those parameters. And really great rates on top of that, because you're looking at here 6.5% with a little bit of a lender credit. And then you're looking at buying it down all the way to 5.625%. So now I'm going to throw a little twist on things here, different ways to skin the cat, right? Here we have what essentially is another 100% combined financing option, because here we're getting the FHA 3.5% down loan, and then we are combining that with a forgivable second mortgage equal to 3.5% of the purchase price as well. No payment is due on that forgivable DPA. And if after 60 months or 5 years, the first mortgage is current and the borrower is still living in that property as their primary residence, then that second lien is forgiven. There are different rate options, but I just picked here the one that is closest to par, which, because normally the DPA borrowers are already a little bit pressed for funds, so no sense in any buy down there if not necessary. So here, this is pretty much our par rate almost, with a 0.05 points or $245 for 8.625 on this one unit DPA purchase at 100% CLTV. And now it gets even better. We can do the DPA FHA loan for a 2-unit property, right? So it does get better. The only difference is that there is a half a point or 0.5 points in fee. So our rate goes from a little bit of a lender credit to a little bit of a loan discount, 0.418 at 8.625 to get that 100% CLTV loan. And then last but not least, this is another way to reach the same objective. This is a 3% down loan, either Home Possible or Home Ready, which are the two 3% down affordable financing options for Fannie Mae and Freddie Mac. Now, these loans do allow combining a community second up to 100% LTV plus. Actually, you can go more than 100% LTV with the community second. Now, the community second does require a payment. It's not a forgivable DPA, but again, if you want to be able to go to 100%, and in some cases, I believe you can go even higher than 100% CLTV with the community second, this is a great option. And again, 6.99 with a little bit of a lender credit, and you can buy that down to 6%. So very good options, giving you 5 different ways here that we can reach 100% LTV, CLTV, or greater for your purchase loans.
All right, I don't see any questions there. So I guess we'll go ahead and wrap it up. Some great options there. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into different topics. We'll have a new topic for tomorrow. So thank you everybody for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.